One Step Ahead by Lundquist and Beslick.
Good morning. This is One Step Ahead Radio, one and only, covering global sustainability ESG topics around the world. This week are several interesting pieces around the world in terms of what's going on, both, I would say, in financial industry, what the UN is doing, and also some of the things that are related to a topic that I will discuss with James. James, welcome to One Step Ahead Radio. I will cue in a bit later when we go through some of these interesting news from this week. And I'll start with one which is something that basically caught my attention. It made me feel a bit bad this morning in Japan, and that one is related to the fact that British Petroleum, as you probably know, oil and gas company, one of them in Europe, alongside of Shell and Total, has been punished severely by financial markets for expanding its renewable energy investments, shifting away their business model from fossil fuels. This article is published late morning in Japan, probably will be all around the world, is related to the fact that financial markets are punishing oil and gas companies, transforming or transitioning their business from fossil fuel expansion into the renewable energy space. And they're using Shell as comparison, which is very interesting because the Shell is one of the companies in Europe, fossil fuel company, that has committed a lot of things in regards to its net zero commitment. But with the new CEO that took over not so long ago, they basically withdraw from that. And the full focus of the CEO is the raw, as he called it, shareholder return. Now, this gives you a bit of a flavor where we are, and this gives you a bit of a flavor that companies that really are trying to transform their business models, and there are many of them across the world, they are not necessarily getting anything for it on the market space, and they are in certain cases like this one getting punished. Now, James, given that I know that you and the Lundquist as a company has several interactions with so many companies working in this space, this notion of ESG Premium, it's something that I've been working with for such a long time, trying to convince companies that there is a premium, they can actually get paid for it. What is your view on this particular sort of a topic of ESG Premium in regards to what's going on, especially in relation to what I just mentioned on BP and getting punished by market because they're trying to do the right thing?
Yeah, good morning, Sasha. What you're talking about with ESG Premium, I think, is really important in the way we frame the discussion around what companies are doing in sustainability, and the way leadership and the board thinks about these kind of issues. Because if they think about it, or it's presented to them only as we need to do this for reporting or compliance, or because everyone else is doing it, then they that's it. You've sort of lost that opportunity for their intelligence and input and understanding. So I think a lot of companies, sort of shrink back into into international frameworks and reporting guidelines and all of these things. They forget about these very strong, important decisions that investors are having to make about business models, where the company is going in the future, and how sustainability can actually create value. I think one of the key things, it varies enormously from sector to sector, but one of the key moments is kind of setting priorities and deciding materiality, because kind of the way it gets framed very often, it's like everyone gets wrapped up about whether it's called ESG or sustainability and what it is, like as if it's this big macro concept, as if it's like this concept that builds in all this sort of complicated, they call them ESG pressures or ESG issues, right? As if it's, we have to, as a company, take everything on board. Whereas very often, it's really a question of getting down to 1, 2, 3 really core topics, issues that are going to drive a company's approach.
James, I just got the message from one of the listeners. They can't hear you. I can hear you clearly. I don't know if there is anybody else listening that cannot hear you, but I can clearly hear you. Maybe we can get. Apparently they can hear you. So, okay. Brett, it's not on our side. It's on your side. Okay, so we can go on. But look, focusing on 1 or 2 issues. What could that be? I mean, for a company having operations, running its business in order to sustain growth, to continue growing, and continue producing new products and services and so on. Do companies really look at this from financial perspective, or is this something they're doing because they want to be a good corporate citizen, or this is something nice to tell to the clients but run their business as usual? What's the sort of underlying driver? What do you think about that?
Well, certainly in Europe, there's a lot of regulatory pressure, there's a lot of compliance pressure, and I think a lot of unnecessary complication around how companies deal with this. So they have big teams dealing with all of these issues. It kind of sucks all the air out of all of the oxygen out of the discussion. So it becomes much more a question of the mechanics of it rather than the strategic value of it. And I think some of the best companies have already made, the opportunity's already gone. The companies that there was a kind of a quieter period in the last few years when you could have that thought and reflection. And now it's becoming more so much a compliance question.
But that's where I wanted to ask you. So it seems that the compliance budgets for sustainability have increased, and while the rest of it has been decreasing. And that is reflected in one of the things that I saw on the social media, which says basically that majority of the money is spent on reporting and compliance, and about maybe half or even 1/3 of that on innovation and research and development in sustainability space, which is quite telling story. This is a big danger, I think, making sustainability / ESG a compliance exercise for a company without actually being linked to their business model. Is that something that you can echo in what you see is happening on the market?
Yes, and at the same time, I think when you break it down into single issues and single topics that are driving impacts on business and on products and value chains, I think there's a lot of experience on the front line of people actually doing the business who actually perceive this and see that the world is changing. There was a very good, very short piece in John Author's commentary he does daily on Bloomberg about the markets, and he picked up in earnings calls from the consumer product sector the mentions of climate change in quarterly calls on US companies has been increasing rapidly in the last few quarters because extreme weather events and climate change have been impacting their supply chain. We've talked about, we've seen cocoa prices and chocolate prices and a lot of other raw materials and commodities. And that's impacting a lot of consumer goods companies, a lot of inflation issues. So that's really, how companies are, in some cases, unfortunately, realizing now how important that single topic is to their financial bottom line, rather than just being something, theoretical that they have to report on.
Yeah, exactly. And the quarterly calls will most likely going forward include more and more information about climate change. They have done so in India, they are doing so in the US, and I'm sure that it's going to happen in Europe as well and other parts of the world. James, thanks a lot for views and thoughts about this. We move on. There are different discussions around the world in terms of if gas, as the fossil fuels, is a renewable energy. And that, of course, depends on where in the world you are and also what kind of energy dependency you already have. There is a recent study has been done on this, published widely across the world, and I think it will be most likely interesting to look at this. And it basically states that transition fuel gas is transition fuel gas only in the economies that have already managed to shift the energy dependency from coal into something else. Now, in the US, that will probably classify as renewable or transition energy. In some other parts of the world, it will be classified as fossil fuel investments. This is also a very important topic because of the fact that in many developing countries and countries that really need a transition towards more renewable energy sources are getting caught in gas dependency. We have seen the trend in Europe. Of course, course, due to the fact that Russia invaded Ukraine, we have a situation that European energy dependency has been resolved not by tremendous investment in renewable energy, but by building out the LNG facilities, platforms for American gas. The question is, of course, is this something that will secure European future in terms of the energy safety, stability, and security, or something that will create more dependency? I tend to believe the latter one. Now, in terms of the artificial intelligence, this topic is very popular. People are talking about artificial intelligence all the time, and some of them are talking about the use of electricity and energy in producing artificial intelligent capacity. Now, Bloomberg Green has done a very interesting research, basically looking at the Amazon, Microsoft, and Meta, how they actually conceal their actual carbon footprint, buying credits tied to electricity use that inaccurately erase millions of tons of planet warming emissions from their carbon accounts. Recently, Microsoft reported that its emissions are about 30% higher today than in 2020, when it has set the goal to become carbon negative. Other tech companies' emissions are rising too. However, Microsoft and other artificial intelligence leaders, they insist that the increase is not because of the use of the energy, but it's the fact that they are building the data centers with cement, steel, and microchips, and it's really not related to the amount of energy that is used by artificial intelligence in the way how it then transferred into the service that people around the world are using. Now, the big question is, of course, if artificial intelligence companies like the one that I mentioned, if they are really being powered exclusively by clean energy, there is basically no physical reality for that claim. They cannot be, and that's the fact, although many of them will claim that. The current carbon accounting rules allowed for the use of these credits that they are using for calculating a company carbon footprint. However, work that many academics have done show that the accounting rules need to be updated in order to accurately reflect green gas emissions. Next time you use the deep translation or GPT or any other artificial intelligence tools, think about this. It is interesting and growing topic, I think, among investors around the world. The data centers are being built everywhere around the world, and they will demand more energy. Only in Europe, I think the energy demand next 10 years will increase by 3.2% on an annual basis. This is a big shift in the way how energy will be used going forward. Now, if you think about the lobbying, and when we do think about lobbying, we think about different industries that are quite influential and making everything they can to influence the rules and regulations, especially in the European Union and in the US. Now, you would not probably think about agriculture sector and the lobby organizations lobbying for laxer rules on environmental issues and more subsidies as being one of them. But if you look at the numbers, both in the US and in Europe, agricultural sector is the one that is dominating lobbying activities across the world, and also making sure that many of the activities from both European Parliament and the US government in terms of reducing negative impact caused by agriculture and food production around the world are not coming to their light. It is annoying, it's a fact, we know it, we are dependent of it, because we eat the food and we consume the food products produced in Europe and outside Europe, and this is something that, of course, given the impact of the agricultural sector, has a significant importance for the overall global CO2 emissions. Now, the last thing that I want to mention, before concluding the session today, is that there is a lot of discussion about the future UN conference that is happening very soon I think it's in South America. It's related to multilateralism. It's related to the fact that we need to agree on certain type of rules of engagement for businesses around the world in terms of accountability and responsibility, and among other things, how businesses together with functioning democratic institutions around the world can support that transition. Now, going back to what I said initially, which I would like to use again to conclude this, because it's a mind-blowing thing, it is the fact today that financial industry across the world actively harms transition of many of the fossil fuel companies that are planning to do that transition, because it's basically punishing them on the stock market, investing resources in something else. This is not the message that has been told to the people around the world after the latest COP. It's not the message that politicians are telling, and this is definitely not the message financial institutions around the world trying to get across to their clients. Now, with that, I would like to conclude this One Step Ahead radio session and invite you to come next week. We'll have a guest, hopefully an interesting one, that we can discuss emerging things and also things that are very interesting for the audience like yourselves. Thank you very much. It's a pleasure to have you here every Friday, and I hope that you will continue to participate. Thank you and have a nice weekend.